Hey everyone, it's Graham here. Today we're diving into one of the hottest topics, shaking the financial world. Is Trump deliberately crashing the stock market? Let's break it down. First off, let's talk about the recent stock market decline. On March 11th, 2025, the S&P 500 had its first correction since 2023, and the Nasdaq experienced its worst day since 2022. A whopping $1.7 trillion was wiped out in a single day. Scary stuff, right? Now, a lot of fingers are pointing at Trump's trade policies as a major culprit. You see, Trump's America First approach has led to aggressive tariffs on China and threats of massive tariffs on European wines. These moves are intended to protect American businesses, but they also come with some hefty consequences. Higher tariffs mean higher costs for consumers and disrupted global supply chains. When businesses pay more, they either pass those costs on to you, the consumer, or they cut jobs. Either way, it puts a strain on the economy. Next, let's talk about the BRICS nations: Brazil, Russia, India, China, and South Africa. These countries are forming new trade partnerships and reducing their reliance on the US dollar. This shift weakens the US economy and contributes to instability on Wall Street. But that's not all. Political uncertainty is also playing a huge role here. With Trump potentially making a return to office, investor confidence is taking a hit. Markets hate unpredictability, and right now we're in one of the most uncertain periods in US history. During the market freefall on March 11th, Trump went on a truth social spree, posting over 100 times in an afternoon. He shared articles praising his economic policies, but this activity coincided with the market downturn. It raises questions about how much impact his posts are having on investor sentiment. Meanwhile, conflicting statements from Trump's administration only add to the confusion. The Treasury Secretary downplayed the crash, while a White House official blamed animal spirits. Commerce Secretary Howard Lutnick even denied fears of a recession. Mixed messages like these only fuel uncertainty and volatility. So, what's the real deal here? Some experts believe Trump could be crashing the market to lower interest rates, making it easier to refinance the national debt. Others think he may be manipulating the market for his allies to buy stocks at a discount. But not everyone agrees. Kathleen Brooks from Minerva Analysis doesn't think Trump is intentionally causing the drop. She attributes it to fundamental economic reasons. And Warren Buffett, who sold $134 billion in stocks last year, signaled that the market was overvalued long before this downturn. So what does all this mean for you? Should you panic and sell everything? Not so fast. Smart investors don't react emotionally. They strategize. Here's what you can do. First, don't blindly follow media panic. Analyze the market trends yourself. Second, consider diversifying your investments to hedge against risk. And third, pay attention to global trade shifts and how they impact the US economy. Remember, market crashes are opportunities for those who stay informed and prepared. So are Trump's policies crashing the market on purpose, or is this just media hype? Let me know what you think in the comments below. And don't forget to subscribe for more insights on finance, investing, and global markets. Stay informed, stay prepared, and I'll see you in the next video.